Hey there guys, and welcome back to Alex Invest. As we can see, the markets are once again green today, which is great to see. But today we're going to talk about a brand new stock, which I think is fundamentally undervalued. I've had this one in my portfolio for a little while now, quite a long time actually. And the smallest cap stock I've ever seen, especially for their revenues right now. So let's get right into that actually. And this is the stock right here. It's BBRW, that's Brewbuilt Manufacturing, right? And you know, they're exactly what they sound like. They're a craft brewing company here essentially. But let's just take a look at their Q3 here for a minute, because we can see total revenue is $927,000, up from $56,000 in quarter two. So that's already fantastic there, right? But there's not all. There's a news article I'm going to show you guys later, which increases their revenue by a lot here. But let's just go through some of these numbers here first. So cost of revenue, only $163,000, right? Compared to their revenues, that's great. Especially the stock price is only 0.0053 at a high of 0.0058 today, right? We're down 9% on the day. But, you know, this revenue for their share price is crazy. I mean, sure, their shares outstanding are 244 million, but it's not like it's an extremely excessive amount here of shares. So great gross profit, right? And then if we look at their total operating expense, sure, 992,000. So you know, that makes their net income still negative, obviously. But what's important is that their cost of revenue compared to their revenue is so low that if they start making some bigger revenues here, then that's just going to push up the price so much. And again, the difference here from what we saw even just a quarter ago, right? We can see cost of revenue is over half of revenue in just quarter two here. That's basically 3 months ended May 2020 here. And yeah, so cost of revenue over half of revenue here, and here it's basically 1/8 of revenue, right? And close to, sure, it's a little off, but anyways, so we can see how much their cost of revenue here is going down as well. Again, even with these numbers, if we see a little increase in revenue, we're going to see net income become positive, and we're going to see this company become profitable. So really, really good things we're seeing here. And let's just compare that to Workhorse, for example, right? This is another stock in my portfolio, and you know, it's been doing well, but I think a little bit of that is also the hype that we're seeing around these stocks, right? And anyways, here, and completely different industry, right? So again, you can't really fully compare these two because they are in different industries. You know, in general, sort of the valuation of EV companies is much higher, obviously, than the valuations for companies like a brewing company, right? Just because of their potential growth ability. But you know, we have revenue here in Q3, 564,000 only, and their cost of revenue, again, 2.8 million. Shares outstanding, sure, is about half of the shares outstanding of Brewbuilt, but still, their price is $37 right now. So insane valuation on this stock compared to Brewbuilt, right? But now let's get into the really interesting stuff. And that is this article right here. This article is crazy. And originally it's from their website here, right? Brewbuilt Manufacturing. But I got it from Globe Newswire. So anyways, year-end statement from Brewbuilt chairman Jeff Lewis, $35 million in sales. Right now, remember, they had $927,000 in sales, and they're moving to $35 million. That is ridiculous. Let's get into this article a bit here. First of all, they only trade on the OTC markets in the pink sheets, right? So the lowest tier here, and that makes sense with their stock price as well and everything, right? But let's take a look at this article, right? It says, Brewbuilt Manufacturing has made historic progress as it rounds the corner of leadership to success in the craft brewing industry, right? And, you know, I talked about how they're in the craft brewing industry already. So with record sales, the company has cleared a path towards achieving a goal for 2021 of $20 million in immediate revenue and $15 million in new market revenue, right? With brewery system sales, because that's sort of the market they're in, right? Brewery systems, so people can produce basically craft brews. Despite COVID setbacks, we maintained constant growth while managing shareholder growth strategies concerning dilution and market cap, right? That's going to be key here. So we currently have a positive fourth quarter in reporting revenues and reducing derivative debt. You know, we expect them to have a positive fourth quarter because they had a positive third quarter as well here. But the revenue increase is just insane, guys. I do not understand how this stock is so small. Their market cap is $1.2 million. Their revenue is going to be $35 million. So their market cap is literally smaller than their revenues. That is unheard of in today's market, I think, honestly. Look at this. So this increases value on our balance sheets, and we must maintain a more aggressive share buyback first quarter of 2021. So they're buying back shares here. It's basically fundamentally, that means that this share price is going to go up just from the buyback alone. That's without the extra revenues and all this, right? And they expect to reduce $5 million in dilution. And we'll get to where the price is going to go from that in a little bit here. But let's get through the rest of this article first. So their 3-step sort of program here, right, is this right here, right? Strategies of a 3-step here. So the first one is our global advertising program with leading industry journals that started in 2020 and will carry through 2021. So they started this already, and it's clearly working. You know, they have increased revenues. They're expecting $15 million in new market revenues. But let's get back to the $20 million in immediate revenue here first, right? Because it says here for number 2, over $20 million in pending orders from customers who were put on hold due to COVID restrictions, right? With new advertising revenue of $15 million, right? So this is what I was just saying. We have the $20 million, which is already revenue they pretty much have. They just have to, deliver on their system here, and then they're going to get paid. It's just that they couldn't do this because of COVID yet, but now they're going to do this 2021, right? Here it is, guys. And again, the $15 million in new market revenue. Keep in mind, they had $930,000 in revenue in quarter 4. You know, they're looking for, and quarter 2, right? That was quarter 3, and quarter 2 they have $56,000 in revenue, and they're going to $15 million in new revenue and $20 million in revenue that already exists. This company is so undervalued fundamentally. I don't understand, guys. Look, and then here, cross-marketing new revenue and driving more business to Brewbuilt Manufacturing from Brewbuilt Beverages, right? So this is sort of their another company of theirs. They work together here. It's a subsidiary, essentially. So anyways, they're doing marketing here, right? More marketing. And clearly the marketing is working. So here, we'll get into the summary now, right? To summarize 2020 compared to 2021, Brewbuilt Manufacturing has $1.5 million this quarter in deliveries, and that's quarter 4, right? We haven't looked at quarter 4 yet, but that's quarter 4, of brewery systems to customers. And in the first quarter of 2021, we'll have approximately $20 million from delayed orders due to COVID. And we already knew that from above, right? But still, we'll just read it again. Why not? The company will finalize the share buyback obligation of $5 million in the first quarter of 2021. You guys understand? That is right now that they're doing this. And this share buyback will automatically push the share price up because there will be less shares outstanding. In 2020, the company negotiated a European distribution and will begin building its first location in Finland in the first quarter of 2021. Again, happening right now. In 2020, the company launched a successful advertising and marketing campaign with leading industry journals, including Pizza Today, Food and Beverages, Beverage Master, New, whatever. Who cares about them, right? But the point is, it's working because they've created $1 million in new revenue in 60 days, guys. 60 days. they've created more revenue, and this is assuming this is all true. It's from their website. Sure, it could be fraud, but I don't think it is. And I looked at their website. They look very, very legitimate, guys. Very, very legitimate. $1 million in new revenue in 60 days. They had not even $1 million in revenue in Q3 2020. In 2021, the company expects $15 million. Oh, we already went over this. In new revenue from advertising program, right? And here, this is interesting. A new market in the restaurant industry. That's another thing I wanted to say, right? They're getting into this restaurant industry where, restaurants can sort of make their own brews or their own craft beer here with Brewbuilt, right? And that's one of their main sort of strategies here moving forward. So really good stuff there. Highly interested in creating more profits, right? Branding and their own beverages, right? That's what we just talked about there. Brewbuilt Beverages, that's their other company there, subsidiary, right? We just talked about that. Will be established in the first quarter of 2021. Again, right now, to offer contract private label craft beer to these new customers as a conduit to selling more brewery systems through Brewbuilt Manufacturing. And that is the article, guys. What an article. $20 million in revenue, plus $15 million in new revenue. They already have the $20 million in revenue confirmed. It's there. It's going to happen. So, what does this mean? Well, let's look back at this. So, they right now have $927,000 in revenue. Let's say we don't even include the $15 million that they will have in new revenue, right? And I've made a little thing for you guys right here. So let's take a look at this, right? This is their Q3 2020, right? And this we just put now for Q1 2021, right? But so we're missing Q4 here. But let's just not worry about Q4 here for a second. Let's just look at these. So we have revenue 920, and this isn't exact. I want you guys to know that it's not exact. I've just kind of put some whole numbers together here, and it gives you an idea of where this company is going, right? So we have all of our numbers here, right? From Q3, and then we've got Q1 2021. So I put $20 million for revenue. So we didn't include the extra $15 million, right? We've left that out. Cost of revenue, we've taken this number right here, which is 163,000 divided by 927,000, which is their cost of revenue divided by revenue, right? And we basically multiplied that by the 20 million to get our cost of revenue for Q1 2021, assuming that it's going to be the same ratio of cost of revenue as 2020. But as we know, what usually happens is the cost of revenue as you grow goes down, right? So we have not included that here. We're assuming we have the same ratio for cost of revenue, right? Which gives us gross profit 16,483,000, right? Then operating expense, again, we've just doubled it here. I said, you know what? Operating expense is going to go up. Probably not that much. So I said double it. Operating income. Again, I've just taken the same number, which obviously this number is likely going to go up again. So marketing, again, I've just doubled it again. We know they're doing more marketing campaigns. I just assume double it. It could be a little bit more, sure, but for now, because I just wrote this up here in the last few minutes here, so it's nothing exact, but I just wanted to show you guys this because it's important to kind of see here where we're going. So net income, again, last quarter it was about negative 240,000, and it was actually about negative 212,000, but this is where my numbers came out to, right? And for Q1 2021 we have 14 million, and then net income attributable to common equities, we just have the same numbers here, right? Makes sense. And so basic EPS, again, 0 and 0.05. Positive EPS here. And it makes sense, net income has gone positive. We have a positive EPS, and this again, we have not included a few things here. We haven't included their $15 million in revenue. We haven't included the fact that they'll probably go down in cost of revenue. We have not included their share buyback here of $5 million decreased in dilution either. That's not included here. We've taken the number of shares outstanding that the company currently has. So again, positive EPS, right? And there's a lot of things that still need to go into this number to get the actual number we're looking for. So that's insane, guys. We have a positive EPS. We have really, really good revenues. This company is growing insanely. I mean, let's just look back at the Webuilt chart here, right? Or the Webuilt financials here. Q3, 927,000. They went to 20 million. That's ridiculous growth. And in Q2, they only had 56,000 in revenue. Guys, this is one of the most undervalued companies that I've seen in the stock market at its current levels. Valuations are insanely high. And we have this company here with a market cap of $1.2 million. I don't know. Maybe I'm missing something here, guys. I don't know. But let's take a look at their balance sheet here too, right? I mean, what is that? Total assets, 844,000, sure, whatever. We're looking for total liabilities right here, $4 million. They can pay this off, technically, if they wanted to, which they don't want to, and I'm not suggesting that they should do this, but especially for their long-term debt, it's good to have long-term debt, guys. It's easy to pay off, small interest. Pay off your short debts first. That's how you want to do this every time. Anyways, total liabilities, $4 million. They can pay that off in 1 quarter if they wanted to. I don't know. Maybe I'm missing something here, guys, but this stock, to me, looks extremely undervalued for what they're going to do in 2021 here and moving forward. It's a growth industry, Again, they have better financials than a lot of these companies, which are worth, $20 a share, $15 a share, $35. We just looked at Workhorse, and I would buy this one. I don't know. I've bought this one. This is in my holdings, and I'm looking to double it, to be honest, if not more, because it just makes no sense. We're down 13% today. Keep that in mind. And that's going to do it for the video today, guys. I hope you liked it. If you did, please like, subscribe, leave me a comment as always. And other than that, I hope you guys have a fantastic day, and I'll see you guys tomorrow.